Hey guys, Boris Lasser, BK Force. Welcome to our weekly technicals for 10/13, 10/17, 2014. Where are the trades? Well, the week that was kind of very interesting. We had a classic short squeeze move, as we had spoken about last week. It pushed it out all the way out to this 28 level, which was pretty much the level that we thought, basically, when you look at the breakdown here, was the classic sort of top out of the euro dollar. It was, though, very, very hard to kind of short into this move towards the 28 because I think a lot of people were pretty much starting to get short at 27. And when the move verticalized, it probably spooked a lot of the shorts and squeezed them out. But anyways, the euro kind of has come back down to the ground here towards the 26. But it is clearly, for the time being, I think, holding on towards higher lows. This 25 low does not seem to be under any threat of any imminent attack just yet. Most of the move here has really been not anti-euro, but has been just sort of pro-dollar, has been primarily a risk aversion move. There has been nothing on the dollar side that makes you really want to get long dollars. And one of the key things that this tells you is actually dollar yen, which has kind of failed miserably here off the 110, continues to consolidate right underneath the 108 level, and really looks to be ready to test this 107. Now that's of course also a risk aversion trade, but basically U.S. yields coming down off of the fact that equities are coming down. All of this kind of helping this risk aversion trade, which is really the trade that's been taking place here for the last week or so. If we get a rebound, that naturally bodes relatively well for the yen crosses, and therefore puts the yen crosses probably on a potential play here for next week if we get a little bit of a rebound in equities. If equities continue to kind of trade to the downside, if we continue to liquidate, which is very natural. This is October. It's seasonally a very, very tough time for the markets. Generally, you sort of sell in October, buy in November, right, on a seasonal basis in the markets. Then we could see the 107 break here in the yen. And that could push, by the way, also the euro dollar closer to this 125 level. But basically, it feels in many ways like we're setting up for kind of a test of support here across all the majors. So if you're looking to now kind of position for a possible pop, either on risk flows or just on the fact that the dollar is just not going to have any further strength beyond the spike lows that are made here at 25, then anywhere around the 25, 26 starts to become a value proposition level. Of course, a break at 25 completely destroys that whole thesis. You're not going to have higher lows. And you could be on your way towards the 22s. So I wouldn't be holding the trade if it broke the 25s. But trying to sort of buy the dips over here ahead of this low may not be a bad trade for next week. In dollar yen, of course, the support here is the 107s, and it really sort of it's natural for them to break the 107s and then want to try to take it to like 106.50. So I would really hold the stop until 106.50 if I was scaling in on the position. For the pound. The situation doesn't look nearly as kind of, I think, attractive in some ways. Cable is under a lot of pressure, but what is relatively encouraging is the fact that the 60 is kind of holding. This 59.50 was the test here. We broke the Scottish low spike lows and came all the way down to, like, I think it was 59.60, and that still pretty much is the operating low against which you probably feel pretty comfortable to buy. But cable has had a hard time rallying, so unless we get a push for some reason on cable to the upside, it seems to be the underperformer at this point. Having said this, though, the 62 is obviously the resist, and the 60 now seems to be sort of the low bottom for the time being in cable. Aussie was doing much better, but this was a very ugly turn. This actually, this kind of a flip here off the 89s all the way down to the bottom really suggests a threat. Well, the threat in the Aussie now is, of course, you had initially the threat of just flows into the dollar away from the carry as everybody thought the U.S. yields were going to get better. Now you have the threat of risk aversion. And, of course, Aussie is very, very, very sensitive to risk aversion because it's the ultimate risk trade. So a lot of, even if, let's say, the Australian economy is not necessarily doing poorly, a lot of risk trades are financed into the Aussie, giving the Aussie yield. So when money needs to come out for margin calls or anything else, this gets shaken out very, very quickly. So I think this test of this 86.50 going to be very interesting and very important to see. In many ways, if this 86.50 kind of holds, that could be the first signal that the risk-off sell-off could be coming down to, could be giving ending on the near term, and therefore giving a sort of a green light for all the risk-on trades to come back on. But it's a very, very dicey situation. I'd be watching that very carefully. Same thing with Kiwi here. In terms of the 77, the Kiwi, of course, the 77 is the RBNZ intervention lows, but it's performing a little bit better than the Aussie in that sense. Obviously, it has the higher yield, but also again watching this support level. This either holds, and if it does hold, it's actually the longer it holds, the more positive it is for the risk trades to turn back up. Or we start breaking down to the 77s. That augurs very, very poorly for all the risk flows. So there isn't that much. It's basically about 100 points worth of risk here. So it's maybe worth a while to take a nibble on the Kiwi to the downside here, assuming that 77 holds. But if it breaks, it's like a damn. I'd really not want to be in that position for the time being. So if looking at the crosses, by the way, so the trade here to the flip side, this is very ugly. I mean, it's very, very hard to want to pull the trigger here. But yet, if we do get a turn in equities, this is going to be one of those interesting trades to the upside. Cable being very, very weak, yen being very weak is really combined for a full blow-off trade here. But now we're coming in, so the support here around the 73, 72 is the first level of support here. That could potentially hold. It could potentially be a trade back up. But it's really going to be a trade on the yen crosses. The same thing with the euro-yen. Let me just pull that up for you. Another very, very ugly trade, but right into support, right? So buying here, minimal amount of risk. I guess basically 100 points worth of risk. You can buy here, hold to 30, well, depending on how risk averse you are, 35.50 probably gets tested. So I would hold risk to 3,500. But this triple bottom, you hope that there's a bounce back. This is all going to be an equity trade. So it's really how you feel about equities in many ways is going to define whether you get a chance to bounce back on this thing. Or this is the October sell-off that just breaks the dam and we go to the downside, depending on your point of view of how you want to trade this thing. The other thing that's sort of interesting, I think, is the CAD. We haven't talked about the CAD. And to me, the CAD is a telltale sign of something very wrong with the COM dollars. We had very, very strong Canadian jobs data, really good across the board, strong wages, good growth, and yet the price went up. And the fact that price goes up against good data suggests there may be more weakness to come. We have, of course, this really, really strong resist here, this 1250, 1270. But a break at a 1250, if we start breaking this up to the upside, really pretty much opens up 1350. It's kind of a runaway train to the upside, and that's going to be worth watching, I think, next week as a potential breakout trade. This really will also be, in many ways, a sign of more bad things happening in the equity market. This is the other version of the risk aversion trade. The more stuff flowing into the dollar on risk aversion is very much a sign of equity markets really starting to collapse. So if we don't see the equity markets collapse, this starts to come back. Aussie starts to come back. It's really a risk trade for next week with the yen component as a side component to all of it to worth watching. So the levels, of course, to review here. In the Aussie, the 86 level, 60 level to hold. In the Kiwi, this whole 77 level. Kiwi gives you a little bit more room to play with if you want to try and trade the bottoms here. And of course, in dollar CAD, can it survive the assault on the 1350s? If it kind of starts to trade back off of here, you may have a chance to come back down to the 1100s. But otherwise, a break above here pretty much opens up the run towards the 1300s. So that's kind of how the week shapes up. Should be a relatively interesting week as we watch the equity markets for pretty much most of the clues to currencies for the time being. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.